Global markets are in the red for a second day amid fears of a trade war damaging economic growth. The tech-heavy Nasdaq index is now in a bear market, closing trade today 5.8% lower and 22.7% down since its record December close.
Now it comes after China retaliated against US tariffs with its own new protections. The head of the US central bank has warned that tariffs will likely contribute to raising domestic inflation even further. Let's go now to our North America correspondent Carrington Clark, who joins us from Washington. Carrington, these fears of a global trade war really reflected in the stock markets today.
Yeah, absolutely. We actually saw some relatively positive economic news out this morning showing that the American labour market remains strong, but that has been well and truly overshadowed by growing concerns about this escalating global trade war. We saw China, the world's second biggest economy, decide to impose its own tariffs on American goods going into China. That's in retaliation to Donald Trump's plan to impose tariffs on Chinese imports into the United States. And that seems to indicate that the chance of there being a settlement in this trade dispute anytime soon is becoming ever so much slimmer. We saw all the markets collapse effectively. The major indices here in the United States saw some quite shocking spiraling downwards selling today, and it actually got more aggressive as we got closer to the close. We saw the Australian dollar tumbling, and the Australian dollar is seen as a proxy for the outlook for global growth. As a major exporter of commodities, usually when the outlook is rosy, Australia does better. But it's also seen particularly as a proxy for the Chinese economy because it's much more easy to trade the Australian dollar than it is the currency in China. And so the bet seems to be that China is going to be badly damaged by this trade war with the United States. We did hear it from the Federal Reserve Chair, that's the US central bank that sets interest rates, and he was notably much more pessimistic than what we've heard from him recently, and he has warned that because these tariffs are worse than expected, it's likely the impacts are also going to be worse.
While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of the economic effects, which will include higher inflation and slower growth. The size and duration of these effects remains uncertain. While tariffs are highly likely to generate at least a temporary rise in inflation, it's also possible that the effects could be more persistent.
There's little indication, though, that the man who set off this global trade war is in any mood for changing direction. Donald Trump, the United States president, took repeatedly to social media today and indicated that his policies are not going to change. He did suggest that Vietnam, for example, was willing to do a deal, but there seems no indication that he's actually willing to drop tariffs anytime soon. Global leaders are obviously watching to see if there is any mood for negotiation. But at this moment, it appears investors have come to the realization that what Donald Trump says about tariffs is what he means. And what he means is for America to completely upend the global trade table.